Hello everyone, I am Pratap here. We are at part 2 of lesson 30. It is about sideways short trade setup. Previous lesson we discussed sideways long trade setup, and all these lessons are having dependencies on the earlier lessons. If this is your first visit, please understand you should complete all the earlier lessons, and they are all already available at our NeoStock YouTube channel. To access all the earlier lessons at our NeoStock YouTube channel homepage, you click on the tab Playlist. Just click on the tab. Now you can find a playlist Supply Demand Zone Price Action course here. You click on the View Full Playlist. Now you can find all the earlier lessons. To start your training from the first lesson, scroll down to the bottom of the page. Here, starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons before you get into the lesson 30.2 video. And learn all these training lessons according to my training instructions. That is very, very important. All my training instructions are available at our Telegram channel. You can find the link to our Telegram channel in this video description. Go to the video description, join at our Telegram channel. So in the previous messages or old messages, you can find all the training instructions. Even I placed the training instructions even in the pinned messages also. So once you find all the training instructions, learn this course according to those training instructions. Then only it will be helpful to you to become a very good independent trader. Okay, now let's get into the session. Sideways short trade setup. Previous lesson also you learned the rule. Sideways setup should be identified only when ITF trend is sideways. For both long trade setups or short trade setups, ITF trend should always be sideways trend. That is very, very important. Okay, for sideways short trade setup, HTF trend should be either downtrend or sideways. And also another important rule, LTF supply zone should always be in confluence with, zone confluence with ITF supply zone. And curve and HTF price direction also plays important roles for identifying the sideways short trade setups. And all these rules are applicable for all the income trades. They are same, no changes. Any income trade, the rules are same. Only thing is time frames will be changing according to the income trades. Okay, we will be discussing 5 scenarios for identifying the sideways short trade setups. The scenario 1, let us assume prices are moving between HTF supply zone and HTF demand zone. And the first thing is HTF trend should be downtrend. This is the scenario 1. And ITF trend should always be sideways. And in this scenario, what is the price direction? HTF price direction. See, here we have HTF supply zone, HTF demand zone. So recently prices entered into the HTF supply zone. From there it is moving down towards the HTF demand zone. So that's why the price direction is HTF price direction is HTF supply zone to HTF demand zone. This is the HTF price direction. Okay, fine. And here we have ITF supply zone. And inside the ICF supply zone, we have LTF supply zone. That means LTF supply zone should overlap with ITF supply zone. Where it should overlap? Maybe at the proximal line, or maybe at the distal line, or exactly inside, anything, any possibility. But it should overlap. That is called zone confluence. That is what you already learned. So that's why the supply zone confluence in scenario 1, sideways trade setup, scenario 1, supply zone confluence should be both LTF and ITF supply zone should overlap with each other. Okay, this is another condition. And the LTF supply zone curve in this scenario, when HTF trend is down, ITF trend is sideways, price direction is HTF supply zone to HTF demand zone, and also HTF supply zone, not HTF, ITF supply zone and LTF supply zone confluence should be there. So in these scenarios, LTF sideways curve should be either high on the curve or equilibrium. So this entire scenario is called scenario 1. All these rules comes under scenario 1. Okay. Now let us assume here we have some LTF demand zone is also there. Generally use the nearest demand zone per the current closing price should be your target zone. Then what is your entry zone? Your LTF supply zone. LTF supply zone should always be with ITF supply zone. That is the rule. Okay, now let us assume price is entered into LTF supply zone. Now can we plan a short trade? Yes. Because in scenario 1, all the rules are satisfied. Definitely you can plan a trade here. You can go for a short trade. And your target should be until this LTF demand zone. This is how you can plan the trade, if all these conditions are satisfied. Okay, this is the first scenario. Then what about the next scenario? Next scenario is also the rules are same. The only difference is your ITF price direction should be against to the primary trend. Here what is the primary trend? Downtrend. When HTF trend is a downtrend, actually primary is a ITF trend. This is HTF is supportive trend. So when your supportive trend is a downtrend, but your HTF direction is against to us. That scenario we will discuss. Okay, this is what second scenario. See here HTF trend still same downtrend. ITF trend should always be sideways. Now look into this scenario. What is the HTF price direction here? HTF price direction is moving from HTF demand zone to HTF supply zone. It is not yet reached HTF supply zone. That means price direction is HTF demand zone to HTF supply zone. In this scenario, how we can plan our trade in sideways short trade setup? Okay, here your LTF supply zone should always be in confluence with ITF supply zone. That is what supply zone confluence. Okay, what about the curve? The curve should be only high on the curve, but not equilibrium. Previous scenario, equilibrium also we considered. But in this scenario, always high on the curve. Why? Because the HTF price direction is against to short trades. But even then we are planning because the supportive HTF trend is a downtrend. So that's why we can plan the short trades in high on the curve. Let us assume this LTF supply zone is at the high on the curve. Then you can plan the trade. And target should be the immediate LTF demand zone. This should be the target. Let us assume price is entered into this LTF supply zone. Because all these conditions are satisfied, definitely you can plan a short trade here. And your target is until LTF demand zone. This is the second scenario. What about the third scenario? Third scenario, both the trends are sideways. HTF, this is supportive trend. This is our primary trend, ITF trend. Both are sideways. In this scenario, price direction also should be in our favor, HTF price direction. That means it should be from supply zone to the demand zone for planning the short trades. Because prices are moving from HTF supply zone to HTF demand zone, definitely you can plan your short trades, but still some more conditions are there. First, HTF direction, HTF supply zone to HTF demand zone. What are the some more conditions? The zone confluence. ITF supply zone and LTF supply zone confluence. So supply zone confluence should be both LTF and ITF. Is it enough? No. One more important condition. The short trade should be only at high on the curve. Your location, curve or location should be high on the curve. When all these conditions are satisfied, then only you can plan a short trade in the LTF supply zone, and target should be until the LTF demand zone. See, prices reaches here, then you can plan a short trade till this LTF demand zone. This is scenario number 3. Then scenario number 4 and scenario number 5 both are all-time low scenarios. So first LTF scenario, the trend should be, HTF trend should be downtrend in all-time high scenario, and ITF trend should always be sideways. And here you see all-time low scenario, not all-time high, sorry for my mistake. All-time low, ATL, all-time low scenario. So HTF price direction should be supply, HTF supply zone to all-time low. See here, there is no HTF demand zone because it is a all-time low scenario. All-time low scenario, there won't be any demand zones. So prices are moving from HTF supply zone to HTF demand zone. Assume there is a ITF supply zone is here, and here you have LTF supply zone. So your supply zone confluence should be LTF and ITF. Of course, this whole thing should be inside HTF also. That is also possible. But curve should be high on the curve. Whether it is just before the HTF supply zone, curve should be high on the curve, LTF supply zone curve. Or maybe whole thing is inside HTF supply zone, so the curve should be HO. So that's why we are not caring whether zone confluence with HTF or not. Only thing we care, the price direction and high on the curve. Okay, what is the target? Target should be LTF supply zone. Sorry, LTF demand zone, not supply zone. LTF demand zone should be target. But you may ask a question, in all-time low scenario, do we get demand zones? This is HTF all-time low scenario. But LTF, there could be demand zones. Suppose LTF demand zone is not there. What is the scenario then? Your target should be with all-time low instead of LTF demand zone. In case if LTF demand zone is not there, let us assume. So target should be ATL, all-time low. Okay, price is entered. Now you can plan a short trade until this LTF demand zone as your target. If this is not there, your target should be all-time low. Okay, this is scenario number 4. Next, scenario 5, last scenario. So in this scenario, this is also all-time low scenario. You have only HTF supply zone, and your HTF trend should be downtrend and ITF trend should be sideways. Now the difference is price direction. See, prices are moving from all-time low to HTF supply zone. So that's why HTF direction is all-time low to HTF supply zone. So in this scenario, let us assume we have a ITF supply zone here, and LTF supply zone should overlap with ITF supply zone. Both are overlapped. And where it should be always high on the curve. Your LTF supply zone should always be high on the curve. If all these conditions are satisfied, then you can plan a trade when prices enter into this LTF supply zone until the immediate LTF demand zone as a target. Assume here you have a LTF demand zone. So this should be the target. So let us assume prices reach the LTF supply zone. Now you can plan a short trade and target should be until LTF demand zone, when all these conditions are satisfied. So these are the 5 scenarios you can plan your short trade setups for all the income trades, for any income trade. Only thing is, Depending on the income trade, your LTF, ITF, HTF zones will be changing, but the rules are same. Let us quickly look into some examples for the three income trades, monthly income trade, weekly income trade, and daily income trade. Quick examples. Detailed analysis, we will be having a separate lesson on detailed stock analysis. At the time, we will see more examples. Now, quickly, I am showing you how well these short trade setups are working. But before looking to the examples, one more thing I should complete, that is the decision making table for sideways short trade setup. Sorry for the mistake. Okay. The first scenario is HTF direction should be supply zone to demand zone. HTF trend is a downtrend, and ITF trend should always be sideways for all the scenarios. And in this scenario, location can be either high on the curve or equilibrium. Either side you can plan the trades. But the mandatory rule for all the scenario is ITF zone should overlap with the LTF zone. What about HTF confluence? It may be or may not be. Either way is okay. But curve should be as per the rules we are going to discuss. Always you will be planning short trades because it is sideways short trade setup. Okay, second scenario, see HTF price direction is changed. Now it is demand zone to supply zone. Against to the HTF price direction, you are planning the trade, provide HTF trend supports the downtrend. Because in downtrend, short trade setups are more supportive. But ITF trend should always be sideways. Now location should be only high on the curve. Equilibrium is planning the trade in equilibrium is risky because HTF price direction is against to us. That's why we are planning our trades only on the high on the curve. And as per the rule, always ITF zone should be having confluence with LTF zone. Only in that scenario only we are planning the trade. And the third scenario, supply zone to demand zone, HTF price direction is in our favor. And HTF trend is now this time sideways. Because it is HTF trend is sideways, we are taking the favor from HTF price direction. That's why against to the HTF price direction, we are not planning any short trades when HTF trend is sideways. ITF trend should always be sideways. And here also high on the curve only the safest. So we are planning HOC high on the curve, the location. And zone confluence, LTF and ITF must be there. And short trades we are planning. All are short trades only. Next, fourth scenario, all-time low scenario. Prices are moving from HTF supply zone to all-time low scenario. In that case, HTF trend should be downtrend. And ITF trend must always be sideways. And the location should be again high on the curve. Because all-time low scenario, we have only two curves, either high on the curve or equilibrium. And confluence, zone confluence, always ITF and LTF. Otherwise, we won't be planning the short trades. Or sideways short trade setup. And the fifth scenario, last scenario, all-time low to sideways prices are moving. And at the time, HTF trend downtrend, ITF trend sideways, and the location should be always high on the curve. So both the ITF and the LTF. See, if you look into all the scenarios, this is compulsory. Remaining scenarios are changing, but supply zone confluence is compulsory for all. Even ITF trend is also sideways for all. So this is the decision. All these 5 scenarios we already discussed. This is the summary of all the rules from all the 5 scenarios. Okay, now let's look into the examples. Randomly, I have taken some scan reports. The first scenario is monthly income trade. For monthly income trade, entry time frame is daily. And when I have taken this report on 29th May 2025, this report is generated. Because monthly income trade, you won't be getting the trades immediately. Sometimes you need to wait for even 1 month or 15 days or 20 days. Sometimes even more than 1 month, after that only you may get the trade. Okay. So Tata Elxsi I have selected. This is a high liquidity zone. Okay. But already tested 3 times. Can we take again another trade? If all the checklist items are satisfied. You already learned checklist items in lesson 20, but a couple of checklist items will be different for sideways short trade setup that you will be learning in the next lesson. That is lesson 30.3 video you will be learning. But are we going to take one more trade from this Tata Elxsi? Already it gave 3 tests. That we will see. But it is a very interesting, all of you please observe, this example is a typical example, even though the rules you learned in the first phase of the training, some of the rules, and one more rule you learned lesson 22, both combined we got this example. See, look into this. Our software suggested this failed ERC candle, base candle, and then a drop candle. This is the zone. See here. August 8th, one base candle. Oh, sorry, not August 8th. This is January 8th. One base candle and January 10th, 2025. So this is the zone. Because it is a failed ERC candle, as a leg-in we have taken. Okay. And with hidden body, this is a drop candle with hidden body. You already learned in lesson 9.3 and 9.4. Hidden bodies and hidden zones you learned. So we got this zone. And it is already tested. See here, it tested. First time it is tested, second and third times. It gave a very good profit. This is the second, I think this is the third time. So somewhere here our software has reported. But if you observe, this is again having one more LOTL zone. Our software did not mention anything about this zone because our software always displays the nearest zone to the current closing price. That's why we should not take the trades blindly. You should do some more analysis from the concepts. You already learned in phase 1 training. LOTL, level on the top of the level, LOTL zones. When LOTL zones are there, if both the zones are violated, then only trend will be changing. And in LOTL scenarios, you may get trade opportunity. In one of these zones you will get. That's why you have to analyze both the zones in LOTL scenario. So in this scenario, this zone is already tested and we don't have any fine-tuned zones here. It is already a tested zone here. So that's why my focus is on this upper zone. And upper zone, we have lesson 22 concept. What is lesson 22? It is a new concept I developed. Lower time frame zone as an horizon to the higher time frame zone. Here we have a 5-minute zone as an horizon. And here you have a strong institutional order flows. Lesson 22 is a very powerful concept. So that's why our trade plan is on this area. See what happened? On 11th June we got the trade. When our report is generated, 29th May. And 11th June we got the trade. After that, prices were falling. Of course, it might have reached the target zone, immediate supply. But even then, if anybody would have holded, so much of profit you would have got till today. But I'm sure, definitely, we would have booked the profit maybe in this drop base rally, follow through candle, somewhere here, we might have booked the profit. Even if you book the profit somewhere here, it could have been 6,100. Our entry could have been at 6,700, approximately I'm calculating. Maybe you would have got 600 rupees profit you would have got. Within how many trading sessions? Here we got the trade on 11th. After that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. In 15 trading sessions, you would have got 700 rupees profit from this stock. It could have been a very good profit. How much approximately we will calculate how much profit we would have got. Let me open zero the margin calculator. This is a Tata LXC, right? I'm not calculating the ROIs, just lot size I am checking. 100. So 700 into 100. 70,000 rupees profit we would have got. In 15 trading sessions, you would have got 70,000 rupees profit from Tata LXC. Approximately. In 15 trading sessions. Okay. This is first example. This is for MIT, monthly income trade. Because entry time frame is, this is the daily zone. Here we have a 5-minute horizon. So that's a perfect trade setup. But before that, already this zone gave one trade, very good profit previously. Okay, next we will look into entry time frame 75 minutes. That means it is a WIT trade setup, weekly income trade. In weekly income trade, short trade setup, I have selected HUTCO. And when I generated this report on 18th August. 18th August. And entry time frame zone is the leg-in is 5E8 at 10:30 is the leg-in, 3 base candles. So this is the zone. Rally base drop. So here rally base drop. And here we have a fine-tuned 5-minute zone. A perfect trade we got. When? 22nd August, Friday it gave the trade. When this report is generated on 18th August, 22nd August. After report generation, 4 days, we got the trade opportunity here. It gave the trade. Because it is a weekly income trade. And after that, see how much profit it would have given you. Huge profit it would have given you. Somewhere this is the target as per the report. The supply zone, 3 base candles. This is the drop, 3 base candles and rally. Somewhere here it reached. When we got 22nd August. 9:15, but it is not 9:15 1-minute candle. Because in 1-minute candle, mostly we will try to avoid the trades because of gap up or gap downs. But it gave after 9:15. But this is a 75 minutes candle. 75 minutes candle. It is a perfect trade. I already verified. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 base candles. 1, 2, 3, 4, 5. So third day, it might have reached the target. In 3 trading sessions. How much profit we would have got? Maybe somewhere around 2009, sorry, not 2009, 209. 209 rupees is the target. Your entry could have been somewhere between 216 and 217. So approximately, let me say in the middle, maybe it is around 216, some 50 paisa. 216.50. And our target is around 207. So 9 rupee 50 paisa could be your target. I mean your profit for each share. Let us calculate how much profit you would have got. This is HUTCO, right? HUTCO is 2275. Into 9 rupee 50 paisa. You would have got 21,000 rupees profit in 3 trading sessions. Excellent, right? So this is a WIT example, weekly income trade. Hutco WIT sideways short trade setup. Let us look into one more example, a DIT example. So recently generated report, 22nd August, end of the day report, this one, 22nd August. Friday, this is on Friday. Ambuja Cement, high liquidity zone, a fresh zone. When the zone was created on 22nd 8, two base candles, 22nd 8, 14, 15, leg out. See, this is the zone. This is what? Rally base drop. See, RBD, rally base drop. This is what our software suggested. It is a 15-minute zone. And this 15-minute zone again having a 5-minute zone as an horizon. The 5-minute zone, this is the 5-minute zone as an horizon. And the next trading session, Monday, because previously Friday this is identified. Monday we got the trade. The next day itself we got the trade opportunity. See, Monday. This is on Tuesday. This is on Wednesday. Probably. Wednesday is a holiday, right? This is on Thursday. And this is Friday, our current trading session. Friday is our last trading session, August 2025. 29th August 2025. Let us assume somewhere in the closing session of the last Friday, we closed this trade. Maybe in 3 trading sessions. How much profit you would have got? See, each day prices were dropping. See here, this is the trading session, we got the trade. Next day, again prices dropped. Next trading, again prices dropped. With gap down, prices are moving. Here we didn't have any gap down. Let us assume at the closing hours, we booked the profit. Maybe you would have got even better profit, but still, let me say at around 563.20 paisa. And what is your trade? Trade could be 582. 582 your trade. Or maybe 582.50 paisa. 20 paisa. 522 is above, right? Okay. Let us say 581. 581.80 paisa. Some buffer I am adding. 581.80 paisa. Let us assume we closed at 563.20 paisa somewhere here. It went even below, but let us assume Friday closing hours we closed the trade. Say 563 or 562.80 paisa. Let me say for 562. Before itself we close it, let us assume. Is it 562? This is 562.20. 560 a little before, maybe 562.40. $562 is below, right? Yeah, 563.40. Sorry for the mistake. 563.40 before, maybe 20 paisa before we close it, let us assume. You would have got 18 rupees profit in 3 days, Ambuja Cement. Let us see how much profit you would have got. This is a 1050 is the lot size into 1050. You got 19,320 rupees profit, maybe around 19,000 or maybe a little higher or a little low. In 3 trading sessions, it's a very good profit, right? So this is how we are identifying all these zones with the help of our NeoStock software, and we are planning our trades with fine-tuned zones we are checking. You need not take an entry exactly at the fine-tuned. Below itself you can take, but you have to keep your risk management in your mind, and then you should plan the trades. Fine-tuning is only for identifying the zone is having institutional order flows. Otherwise, higher chances of zone violation. You already learned when a zone can be violated in lesson 16.2 video. That's why always we fine tune. Fine tuning is not for taking the trades. Fine tuning is for confirming institutional order flows are there. Generally, you keep buffer and you take trades before the fine tuned zones. If risk management is very, very high, then you wait until prices reach fine tuned zones, because many times price may not be reaching fine tuned zones. Before itself, it is coming and going up. Especially in DIT trades, WIT trades and MIT trades. Only intraday trading only, the HLQ zone trade setups only, you plan trades in the fine-tuned zones, because intraday risk management should be very, very, very strict. But otherwise, because we have previous video, we have seen how long trade setups are working. Now in this video, we have seen how short trade setups are working. So this is how you should prepare your plans. But detailed analysis of for analyzing the stocks, because LTF, ITF, everything we need to see zone confluence, all the rules are properly satisfying or not. We have to verify all the rules. So that kind of detailed examples we will see in the last video, in this lesson 30. So next video you will be learning sideways trade setup acceptance checklist. You already learned trade acceptance checklist in lesson 20. Majority of the rules could be the same, but some rules will be changing for sideways trade setup. Because whatever the rules you learn in lesson 20, they are for bullish and bearish trade setups. Lesson 20 checklist. Sideways trade setup, few rules are changing. So that's why. But anyway, we will discuss all the rules in detail again, so that consistency will be there. There won't be any confusion between sideways trade setup and bullish or bearish trade setups. So after that last video, we will be seeing detailed examples. So this is about lesson 30.2 video. Hope it will be useful to you. Let's all meet again in our next video. Thank you.